the new backbones of investment, AI, defense, they're not mutually exclusive from energy transition. In fact, I think they accelerate it. And emission reduction ultimately is likely to be an outcome.
We're so pleased to have Peter Tertzakian here today on our podcast. I've had the pleasure of knowing Peter for over a decade and worked with him on a variety of different things. And he is a true thought leader that is shaping conversations around energy, around innovation, around different global economic trends. Peter, you have an extraordinary ability to connect the dots between energy, geopolitics, broad economics, and the trends that we're seeing that influence decisions in business. And currently, it's never been more volatile than before. So thank you, Peter, for joining us today.
Well, thank you. Thank you for having me.
So, Peter, you've watched this clean tech industry for a number of decades, and if you look back a couple of years ago, there was a bit of a mini gold rush. There was all kinds of money, government activity, policy, small innovators, large innovators pushing to do a variety of things around net zero, decarbonization, but even just energy efficiency and generating new alternative energy developments. And we've seen quite a change since then. At Emissions Reduction Alberta, we've seen a high degree of attrition on a number of projects. It's getting very, very difficult to move projects through that commercialization valley of death for a variety of reasons, policy, investment climates, you name it. Would love to get your overarching thoughts on where this sector is now and what you're seeing.
Yeah, I think some perspective is important in terms of understanding where we are today with the themes around climate tech, green transition. There's a whole bunch of phrases that sort of capture the notion of migrating to new energy systems that don't emit carbon. But I would, for the moment, sort of rewind it back to circa 2007-8. You know, Al Gore comes out with the Inconvenient Truth. The subsequent sets of COP meetings generate excitement, leading to the Paris Agreement in 2015, which really was a catalyst for then the whole net zero movement, circa 2016-17, and policies that started to be enacted to facilitate through governmental means, basically, the transition. It really peaked in around 2022-ish with the Biden administration, the Green New Deal, if you recall, then the IRA. And that was really when the sort of like peak excitement around the potential for the transition occurred. So if we wind back to this sort of apex or this climax of clean tech that had sort of ramped up and accumulated all the way to the Green New Deal and the IRA, the anticipation of growth at a time when there wasn't a lot of geopolitical issues. We're just on the verge of the Ukraine-Russia war, which sort of changed the frame. That was sort of the turning point, in my opinion, in part. And so all of a sudden, the world had something different that it needed to think about. And parallel to that, we were coming out of the pandemic, we had inflation, and then, of course, we did have artificial intelligence as sort of like the first iteration of ChatGPT came out, and so on. So the culmination of that, and then, of course, the election of the Trump administration has really diminished the perspective that energy transition and clean tech is a growth area. And markets also look relative to other areas. So that's issue number one. I would say issue number two was whenever there's I'll call it an expectation cycle. What happens is, especially for subjects where investors don't have a lot of institutional memory, and I know we're going to come and talk about that. You have a new crop of investors, they don't really know, so they sort of all pile in, and then it has to rationalize, the market has to rationalize and understand this broad landscape of energy possibilities beyond our incumbent systems. And so in the early phases, people put their money everywhere on the proverbial
Making bets.
make bets on a map.
Yeah.
I think it's a good analogy in a sense that I'm going to make bets on all the horses.
Right.
But as the experience level and the knowledge level of analysts and others in the investment community rises, they start to discriminate between the bets and the horses, and some of the horses fall behind. Of course, the three big horses that have really made it, I would say, would be the solar, the wind, and the batteries.
Yes.
And then everything that spins out of that,
Right.
like electric vehicles and so on. So, to me, then a lot of the other bets that were made on a whole bunch of other things, because they were riskier bets, it's not to say that they're not necessarily going to pan out at some point, maybe a different race. But then against the backdrop of all of the geopolitical angst and everything else, all the way to today, one can see that the emphasis is on different sectors of investment. So that's why, in part, investment into the clean tech space right now is so difficult. It's just the perception of growth is no longer there, it's elsewhere.
Right.
And there's a whole new risk paradigm that investors have to think about.
So at Emissions Reduction Alberta, we've been doing this now for 17 years, where we have a portfolio of investments, and we have been placing bets in a number of areas. We saw in the past couple of years massive bets being placed on carbon capture sequestration, on hydrogen, as you mentioned, a bit of hype cycles. And through that trajectory of those investments, we've been able to see what's successful and what is not successful now, maybe into the future if circumstances change. But coupled with an environmental policy agenda that was looking purely at environmental gains without recognizing the economic business case that had to go along with it. And I think that's where a lot of the companies that we've supported have been challenges to make sure that that business case and the economics work on the deployment of these technologies.
Yeah, I think, again, for some perspective, what is the role of government? What is the role of ERA?
Right.
As a crown corporation, as part of government, to think it's to place the early bets to get these companies to grow. But ultimately, as these companies scale up and their costs go down and they get adopted, they should stand on their own feet.
That's right.
And I think that the issue also is that these companies, some of them have been able to do that, but many have not.
So a good example of a successful growth area that we've seen at ERA as of late has been methane monitoring and mitigation, where there is a demand by the industry to address that issue, and it also supports their economic business case. And we've seen a number of smaller innovators develop AI-empowered monitoring tools, satellites, on-the-ground surface measurements. And even despite the pullback from Trump and others, we're seeing a lot of these energy companies in the US and internationally still having a desire to reduce methane and manage that issue. So it's finding those pockets where there's policy and government alignment along with a market and investment business case. What, in your estimation, are some of the current areas where new technology developers would have sort of success in how they brand, they market, and the streams of technology focus that really would have a compelling business?
Well, I think methane is interesting in terms of what you mentioned, because it's the technologies in parallel with other broad technological trends. So the ability to deploy sensors, microsensors, and couple it with computing power, artificial intelligence, and so on. So I'll call it sort of the clean technologies, the emissions-related technologies are also evolving in parallel with the broad technological trends. Then that's a good thing.
Yes.
Right. And monitoring is one area. But if we now get into things like energy conversion, say, converting from hydrogen to electricity or and you need multiple conversions to get from primary source of energy to end use, that requires a lot more research, development, cost, deployment, dependence upon others in that value chain. And then it's all of a sudden it's more complex.
So you talked a little bit earlier about AI, and perhaps it's a hype cycle to some extent right now. There obviously is large investments. We're seeing too, lots of interest on the electrification side in many instances, perhaps not as big as was pronounced a couple of years ago. But are those areas that you see some significant developments in, and what's your current thinking around those? Are they hype cycles? Are they real?
Yeah. This is a huge step change in capability. From an energy perspective, and because energy is so coupled with emissions, I think it's a very important, as I highlighted just a couple minutes ago, a parallel technological trend that's very important to energy transition. Why? Because an AI data center is basically a heater. It's just all energy. I mean, AI, artificial intelligence, is information. Information is an abstraction. Information piggybacks and is encoded in energy. It's encoded in an electromagnetic energy. So in a data center, it's electricity in. There's this abstraction of information that gets pulled out, but all the electricity gets converted to heat. And it's worse than that because the heat that's generated has to be cooled. So the massive amounts of electricity that are needed and the cooling leads to an added imperative to make that whole process more efficient. But it's also in parallel the hundreds of billions of dollars that are being raised and deployed by the hyperscalers, the data center companies, and everybody in that orbit and periphery is serving to scale up electrification much faster than any policy would have done so. And if we think in terms of energy transition and the major themes that were coming out of transition to clean energy, it was all on the backbone of electrification, mostly. So this is why, although there's sort of a negativity around investing in clean tech, climate tech, energy transition, in actual fact, a transition is all happening, but the drivers are different. And I would argue the drivers are much more aggressive, much more aggressive than just mere policy. And I think we're going to see some big changes. And I think finally that companies in the transition space that piggyback on this mega trend and leverage off of it are the ones that are going to be successful.
Right. So assuming a big magnification of power, electrification, power generation is required to meet the AI demand and electrification demands, where would it be astute for would-be innovators, investors, and thinking a little bit about the Alberta context in that, where is it we need to focus? We have a diversified portfolio of power generation in this province. We're very lucky to have that. But where do we need to focus in the next 10 years and 20 years in terms of that electrification?
Sort of on the backbone of electrification. That's where you're going to see the biggest changes because of the hundreds of billions of dollars that are being deployed, number one. But number two, because actually the data centers and the computing power required to generate this information is actually relatively inefficient. And there's going to be a lot of money, it's already a lot of money in terms of, okay, like this is crazy amounts of primary energy that we need to convert to electricity to run these heaters. How do we make this whole system more efficient? And out of that will spin out the opportunities. So, I would say we can have the discussion all the way up from the upstream primary energy sources through the system, through the end use of the electricity.
Right. Yeah. And one of the things we're seeing is more AI-enabled electrification support infrastructure, technologies that support improved transmission, for instance, or facilitate improved generation as an area that we're still decades behind in terms of that kind of new infrastructure being deployed on the electrical grid, for instance, as something that needs to be thought about into the future.
Yeah, we need, and actually, maybe you and I don't need to think about it. Like the innovators need to think about that. The clever people. Like it's not up to me. I mean, in some ways, I'm not the one to ask about what's going to be the latest and greatest, because there's going to be a lot smarter people than me who
Right.
think. And so to me, the analogy is like very, very close to winding our minds back to the late 19th century, early 1900s with electrification, when the grid and lighting, electric lighting.
Yes.
I mean, light bulbs were effectively heaters,
Right.
but electric lighting was the catalyst to build the grid. And then all sorts of clever people said, well, what else can we do with this magical stuff called
Yes.
electricity?
Yeah.
And there that spun out everything from vacuum cleaners, refrigerators, and hair blowers.
Yeah.
So, so you have to hang your innovation off of the mega trend.
Yeah.
The mega trend is electrification. Electrification was the trend we were looking for
Yes.
3-4 years ago or more to drive energy transition.
Yes. Yeah. Now we have different drivers.
Now we have different drivers.
So I want to zoom out, Peter, now with a focus on the broad geopolitics of the world and very interesting times that we've had. And you've put some papers and articles forth on this in recent past, when we're moving from a multilateral focused based rules order, think of Carney's Davos speech, for instance, and moving to a mercantile state capitalism you had talked about. How do we need to be thinking about this as we support innovators into the future and focus on technology development?
Yeah, we need to think about where the world is. Our Prime Minister Carney, did articulate at Davos the rupture.
Yes.
You know, basically the need to think differently about the world. I have written about that even over a year ago, that what I see is much more of a mercantilist economy, so like these 17th, 18th century mercantilism, where the great powers at that time backed their industries to go out, and at that time to go into places like Southeast Asia for spices, and prior to that go to South America for gold. And so this type of circumstance we find ourselves in, where we have, for example, China, which has a lot of state-backed industries, that has invested heavily and strategically in clean technologies, from solar to batteries to cars to you name it. Then now the United States also adopting similar types of investments, whether it's in semiconductors, the invasion of Venezuela. Behind the scenes, we're not sure what's happening, but there's President Trump saying to the oil companies, do it for your country.
Yes.
And probably implicitly behind the scenes, some sort of state-backed incentives for American oil companies to go into Venezuela to offset the risks. That distorts the free markets.
Yeah.
So we have whether it's China or the United States backing their big industries, do it for your country, and the sort of the realist world that we're in right now. Canada has to think about, okay, how are we going to play in this? Because what Mr. Carney was effectively also saying is that the free market, everybody is friendly world is over. We are now in a new world.
Yes.
So I firmly believe our federal government gets it, whether it's our citizenry at large or whether it's our corporations in this country, recognize that competing against state-backed capital is very difficult unless our industries are also state-backed.
Right.
But we are not in that mentality
No.
at the moment. It's just like, okay, government, get out of business.
Yes.
Don't touch that stuff. Now, I mean, I know ERA is a beneficiary of that
Right.
kind of thing, but it's really small relative to the big picture.
Big picture. Yeah, absolutely. And I've heard that refrain for many years. Government needs to stay out of the business of business, and I understand that policy drive where it comes from. The problem is the playing field is not level.
It's not.
And just about every jurisdiction intervenes in some fashion to support economic development, innovation development, and we've had a big role in that over the past several years.
Yeah.
So do you feel, you mentioned that you think the federal government has sort of a line sight on this and gets it to some degree, but are we not caught a little bit in that sandwich between the US and China and other powers now, and how do we navigate in that in terms of our economic interests and our in the energy sector, the technology sector?
Well, we are caught. It's not likely we're just caught between the US and China. If we think about how our companies, as they grow from seed stage and growth stage, and hopefully large and mature to contribute to the prosperity of our country, and also we need to expand our exports into the big bad world that we find ourselves in. This is not a neoliberal Adam Smith kind of world we're in, right? Like it's just, this is not all free markets anymore. This is a distorted market. And that leads to also the recognition now that there's, in addition to AI driving electrification, there's another mega trend, and that's defense.
Yes, right.
And defense spending is being amped up around the world, including here in Canada. And a lot, whether it's drone technologies or other kinds of technologies, are also things that potentially create the backbone for transitional type technologies as well. If you ask me and say, okay, well, where to invest from it, I can't answer it, but I think clever people are going to piggyback again on this, and that's what you should be looking for. And that kind of leads to, like, what is the narrative for companies in the clean space to raise money?
Yes.
Right. Well, historically, it was, I'm a beneficiary of the Inflation Reduction Act, the IRA in the U.S., or here it's I'm getting so many carbon credits or whatever. Investors are not backing that.
Right.
They're backing AI and defense and these kind of megatrends. So if you're pitching a transition type company in the world of energy, I believe you have to piggyback it on those megatrends.
Yes.
And throw that into your narrative.
Right.
Because otherwise nobody's going to pay attention.
Right.
But the good news is both defense and AI are massively energy dependent.
Yes. Right. So there's got to be strategic opportunities and economic opportunities within that. So at ERA, we see this firsthand, as I mentioned, where we're seeing more deal flow than ever before, more applications to our competitive calls, all kinds of really interesting projects across the gamut. But more than ever before, they're really having a challenge getting financing from the venture capital or the institutional financiers for a lot of these projects. But those projects that have an economic business case and are focused on competitiveness and have an emission reduction benefit are still getting funded, are still able to move forward. But it really is sort of a shift in branding and how a lot of these companies.
It's a shift in branding and a shift in thinking.
Yeah.
I mean, I'm going to bring it back to some of my opening statements, and that is investors invest in growth. But emission reduction, I know that's the name of your organization, but by definition, that's a declining business. Because we want emissions to decline. Okay. But to an investor, that no longer resonates. Well, if it's a reduction, I'm not investing in anything that doesn't grow. I want to invest in growth. So, and what I'm saying is that the new backbones of investment, AI, defense, they're not mutually exclusive from energy transition. In fact, I think they accelerate it. So, and emission reduction ultimately is likely to be an outcome. But emission reduction is not the driver anymore, in my opinion.
So Peter, you're an energy historian, and you've followed all kinds of mega trends over the years, in particular with respect to Alberta and its very dynamic energy history. We talked about institutional memory and how the sector sometimes doesn't remember the lessons it learned 10, 20, 30 years ago. With respect to, we talked about carbon capture sequestration and hydrogen, for instance, as there was a lot of hype cycles and there's focus. ERA funded a lot of feasibility studies in that, and we learned a lot. So we're way smarter now than we were 5 years ago about the reality of these technologies, their economic business case, their technology development, and so forth. But what would you say on that whole, not repeating the lessons of the past and how we bring that institutional memory forward?
Yep. Yeah. For me, it was like a movie we've seen before.
Yes.
In 2021-ish, 2021, 2022. Why? Because it was the narratives, the technologies and everything that we're trying to commercialize and transition to. Back then it was called energy technology dominantly,
Right.
although the word clean tech did spin out
Yes.
in the late 1990s, early 2000s. So the period between 1999 and circa 2001, 2002, there was a huge hype cycle, as you call it. And I was in the investment banking business back then. And it was, the magic was doing $100 million deals,
Right.
which even by today's standards is huge,
Yes.
right? And it was like doing $100 million deals for fuel cell companies, for ultracapacitors, for superconductor companies, and you name it.
Yes.
And everything fell apart
Yeah.
because at the end of the day, many of them didn't prove to be commercially viable. Even back then, actually, solar was way too expensive.
Right.
And batteries and the early electric vehicles. Why we didn't remember that, unless you have gray hair like me, in 2021 is because a lot of the investment managers that lived through that had either retired, and we didn't have the means to capture their notes and their investment committee
Yes.
minutes and all that kind of stuff. Even in the firms that I have no idea where those notes have gone, right? So actually that brings us to the importance of today is, keep your notes because with the miracles of the AI and the data storage and everything else, you can create a chat bot or whatever and say, when did we do a deal like this last time? And poof, it'll come up.
That's right.
Whereas all that institutional memory of the past was either lost in the tacit knowledge of the people that retired or in the paper files that have been probably shipped to the dump or who knows where they are.
Right. Yes. Yeah. No, that's a great thought. Another item that we've talked about before and wanted your thoughts on is, so a perennial issue for a lot of our innovators is getting industry to adopt their technology, the whole area of technology adoption. And while our energy industry has undoubtedly been innovative and entrepreneurially successful for over 100 years, we have a culture in this country of a reluctance to be the first in. We want to be second or third or fourth. And what we see is a lot of our innovators develop things here but can't get a market. They don't get a first adoption, so they go to the States where there's more risk capital, where there's more willing adopters of those technologies. Do you think that's an issue? Is it a cultural issue from your perspective? How do we solve that?
Yeah, I'm thinking I'm reluctant to accept that thesis.
Yeah.
But I think there's some merit to the notion that Canadians are more risk averse than Americans in terms of the adoption or trying new technologies.
Yes.
But I'll maybe send it back to you. Imagine somebody walks into your office and says, Justin, get rid of all your spreadsheets and all your processes and try this new process.
Yes. Right.
And so what are you going to do? Are you going to take that risk to get rid of all your investment protocols and processes and adopt something new?
Yes.
Now, if you're a believer that what is being proposed is going to really give you a competitive edge
Yes.
relative to the other funders of these sorts of things, you may wish to take that risk.
Right. Yeah.
Are Canadians more reluctant to do that kind of thing? I would argue generally less, but I wouldn't broad brush it to
Completely.
everybody.
Yes. No.
I don't think that's true.
No.
So that's it. And then there's other dynamics that are psychologically rooted. For example, somebody selling something new comes to a middle manager
Yes.
and says, "Hey,
Yeah.
I could really improve your business processes, and you look good." But there's a lot of if it ain't broke, don't fix it.
Yes.
And the middle manager may not take that risk
Yeah.
for fear of
Failure.
failure,
Yeah.
basically. So the tolerance for failure is probably lower
Yes.
here than in other places.
Right. And I would say perhaps the risk appetite differs depending on the size of the company as well. So when you think of energy companies, a small startup exploration company versus a big multinational, they're going to have lots of different sorts of checks and balances on the adoption of those risks.
Yeah,
right?
no,
So,
absolutely.
yeah.
I think there's other things that may change this attitude. I'm going to tell you, since the second term of President Trump, the tariffs, and this new era that we find ourselves in, where all of a sudden commerce is not going to come as easily as it used to from our largest customer, the United States.
Right.
So all of a sudden we say, whoa, we've got to find other markets, we have to compete. And to compete, you have to take risks. And to compete in this, as I said, very turbulent world, you won't survive unless you take risks.
Yeah.
So, the next generation of leaders, or even the current ones, may have to have a cultural adjustment to try and adopt new things, because arguably it's been too easy
Yes.
to run a business in Canada because we always had the ready market available in the United States.
Right. Yeah, that's very true. So Peter, you make a great distinction between cleaning up someone's mess and then preventing the mess in the first place.
Yeah.
We're thinking about things like recycling or industrial process
yeah.
efficiencies and so forth. So we talked about the fact that we've had some challenges in some areas of our portfolio at Emissions Reduction Alberta. We pivoted now to open the funnel wider to a variety of new technologies that are emission reducing, but in areas of water treatment, for instance, or soil remediation, or a bunch of advanced materials and recycling. And we're seeing lots of great innovations take hold in that area and need for our investment in them. But you've talked about some of the dragons hidden in the recycling business particular, and the difficulty in not only the technology, and we've seen this, but in a lot of the recycling businesses, you're actually inventing new business models that never existed before. And that's even a greater challenge very often than just getting the technology to work. Right. Any thoughts on that? Expand on that?
Maybe you can just I always like to back up and think about the bigger picture, what's going on here. So we want to understand the difference between product innovation and process innovation. Yes. Okay, so product innovation is bringing out a new product to use, consume, what have you, versus process innovation, which is driving down the costs, increasing the efficiencies of manufacturing the product. So if that product is joules of energy that we want to take from primary source, whatever that primary source is, wind, sun, a lump of coal, oil, gas, you name it, nuclear, all the way to some end use, if we think about the innovations that were being proposed, a lot of them were product innovations. Hey, we have a new way of converting a primary source into electrons, or a new series of things. And lost in that conversation was, well, okay, we've got a whole trillions of dollars of established infrastructure. Maybe we ought to think about making our current manufacturing processes more efficient. And why that's important is because, okay, if you make something twice as efficient, you need half as much primary energy.
Right.
Okay, now cascade that. Imagine, and I know in many of these processes, it's the physics preclude it from being twice as efficient. Yes. But you don't have to be twice as efficient. But let's just say for a minute, so let's say you have 3 cascading conversions to go from a traditional source of energy to some end use, be it a light bulb or a heater or whatever. And each of those 3 cascading things in the process became twice as efficient. Well, now you're using 1/8 of the amount of the primary energy source. Yes. Well, that 1/8, I mean, I think we would all say, sign me up, because even if it's an emitting source or process, using 1/8, I just cut by 7/8. I mean, it's amazing. So, efficiency has always been an underappreciated, because we're sort of in this mindset of always wanting to innovate to introduce more products rather than trying to innovate on the processes. And I think this is where we're coming to now, is a realization that, okay, the incumbent processes are very difficult to displace because we have trillions of dollars of infrastructure that we've invested in. So how can we improve the efficiencies? And that's the way I think about it. And the benefit is, along the way, it's not just emissions, it's all sorts of waste. I mean, this is the opportunity, and I think you've recognized that, right?
Yeah, very much so. So we get a lot of uptake now around our energy efficiency programming. So we have one of the most successful energy efficiency programs deployed in Canada right now, which is funded through the federal government for manufacturers. And obviously the increased price and energy inputs are an increased incentive for a lot of these manufacturers to improve their bottom line and do the little things or the important things to manage those energy efficiencies and improve upon their economics. Peter, you are a big consumer of data, a big fan of data. You absorb tremendous amounts of it, and you connect dots, and you build analysis from that. And that really is the path to a wise future. You, at this point, are building a real-time economic data portal at Studio.Energy, your firm you started. Can you tell us a little bit about that and sort of your follow-the-money approach?
Yeah. No, thanks for asking. So, data is an interesting word, often confused with information and often confused with knowledge. So data is mere numbers or qualitative snippets, people's opinions and thoughts merged around those numbers. Okay. By themselves, they don't mean anything. When let's focus on numbers. So you take a bunch of numbers that get generated by virtue of some event. Okay, so let's just say the bombing of Iran changes the numbers for commodity prices. Okay, all of a sudden the price of oil goes from 62 to 72. Okay, that's a change in the data and the numbers that we can capture. Data then must be converted into information, which is charts and graphs, or things that now we can interpret. Information that is interpreted, so you look at the charts and graphs and you say, okay, this is what I think it means. That then becomes knowledge. And then knowledge is brought to a table to discuss, and that discussion leads to the most value added part in this supply chain of data, information, knowledge, and that is a decision. Ultimately, that's the final product. So what I'm describing to you here now, further to our discussion about process innovation, is what we're developing are processes to go from unpredictable events, of which there are now many on a weekly basis, through to what those unpredictable events do to the, I'll call it number sphere or number verse and opinion verse, capture that, turn it into information, turn it into knowledge, create the forums for discussion that ultimately lead to quicker and better decisions. So what we're trying to do is really streamline the processes of knowledge.
And in one of your first forays into this mapping, you did assess our oil sands technology investments at Emissions Reduction Alberta, and it was very helpful to be able to see the landscape of investments we have made in the oil sands in order to better determine how we position ourselves into the future and looking at it in a much more descriptive, holistic way.
And so that is at that knowledge phase, because we have created the landscape, as you call it, which really is the broader term for that would be context. And that's the other thing that we focus on, is giving the context, because what I've seen in my career spanning data and data science information is the gradual sort of the horse blinder effect, or some would call it the rabbit hole effect. within cognitive biases, it creates very much sort of like recency biases and other types of biases where you miss the proverbial forest for the trees.
Right.
So we bring that into it because we want to be able to capture at that front end in real time the impact of an unpredictable event, flow it through our systems, contextualize it,
Yes.
so that people can have a broader conversation about what it means. I mean, this is sort of common sense. It's just like, show me the map of Canada so I understand how I go from Vancouver to Montreal. If you just give me the map of Winnipeg and you're in Vancouver, it's not really helpful, right? Like I have to see the whole thing before I go from one to the other.
Yeah. And that's a great analogy, Peter, for what this podcast is about. What we hope to encourage with all of our innovators is to make sure we don't have those horse blinders on. We're looking at the whole context of things as we make decisions on new innovations that, you know, are going to potentially change the context or change the economics or change the process efficiency of a variety of things. So, you know, thanks for sharing that. So, final question to you. What's one sign of light or source of optimism you would leave with Alberta's innovators?
Well, as an Albertan through and through, although I was born in Saskatchewan, but I've spent 98% of my life and career in this wonderful province and studied the history of it. I mean, we are very much a culture still of innovators. We seize the opportunity. Contrary to popular belief, I believe we have the ability to pivot. If you think about how the province was started, the resource was agriculture, and then coal, then oil and gas, and now wind and sun is in the mix, as well as everything. Our industries are diversifying into aerospace, into defense, into energy. I mean, you name it. Right, and so this is very much a can-do province.
Yes.
And you know, further to our discussion about culture,
Yes.
which is so important in innovation, I believe we have what it takes. And I also work, as I know you do, with the next generation of leaders, which I'm passionate about mentoring. And what I see in the next generation of leaders is that can-do willingness, the willingness to embrace new technologies like artificial intelligence. They are the ones that are going to bring it into organizations and to be able to do things that we haven't thought of, to be able to piggyback off those mega trends that we talked about earlier.
Right.
So I'm actually very optimistic about what can be done in this province. And you just have to sort of cut through all the noise and the chaos in the world and just focus on what's doable. And I've seen a lot of change in my career. The opportunity set of what's opened up is just amazing.
Yeah, that's great. Well, thank you, Peter. I think we'll wrap it up there. Really appreciate you sharing your time, your wisdom with us. It's been a great conversation. Thank you.
Thank you.